It is the much talked about IPO in the Indian consumer sentiment. I'm talking about Mamaearth. The parent, Honasa Consumer, is going to hit Dalal Street before Diwali. Do remember they own brands apart from Mamaearth like the Derma company and BBlunt that was bought from Godrej Consumer. With investors like Kunal Bahl, Rohit Bansal as well as Rishabh Harsh Mariwala of Marico on board, we find out what their plans are to grow the business. Joining in right now on the show, we have Varun Alagh, who's the chairman and CEO, as well as Ghazal Alagh, the chief innovation officer at Honasa Consumer. Thank you both for taking time out and joining in. I do remember clearly when you came to our studios the last time, you said that we are in wait and watch mode. And look how things have changed already. Let's talk about this IPO that you're targeting before Diwali. And what could that really value the company at? Because there's 10,000, 12,000 crores, all numbers floating around. Give us all the details.
Hi, hey, Avan, pleasure to be talking to you again. And yes, we are happy. Finally, the moment is here. And I think this moment beyond numbers needs to be cherished about the fact that we are a young couple coming from a middle-class family who started this company less than 7 years ago. And it's the power of this new India and power of dreaming in this new India where anything is possible. And in less than 7 years, a middle-class couple like us can take a company public. And I think that dream is something that is just so exciting to sort of be a part of. And from a perspective of the IPO, and it's an IPO where we are raising about 370 crores in primary, and some of our early investors are also selling their early ownership, and which takes the overall size of the IPO close to about 1,700 crores. And we have issued and opened the price band today. The price band is at the lower end at 308 rupees, and at the upper end 324 rupees is where the stock is priced at.
All right, and what does that value the company at? Any details?
Yeah, that will value the company at slightly north of 10,000 crores.
Slightly north of 10,000 crore rupees. Now let's talk financials. I'm addressing this question to either of you so anyone can take it up, because there was that loss of about 151 crore rupees for FY23. And that was largely on account of the rising employee costs as well as some of the other expenses. Given that we have seen your overall costs outpacing your revenue growth, it has affected the overall bottom line. So what's the plan to rein in your costs, and when do you think that you will remain sustainably profitable?
Avan, I would like to clarify one thing, that if you had to look at FY23, and we did a revenue of close to about 1,500 crores, which is a growth of 58% over last year. And now in this year, and if you remove one exceptional item of goodwill impairment, which is a non-business related expense, but an exceptional item, and if you remove that, we're actually profitable. And our adjusted EBITDA for FY23 is plus 3%, and that in Q1 24 and has gone up to 7% already, and which is to the north of 30 crores just for Q1. And that's something that we want to clarify, that as we are growing, and costs as a percentage are actually coming down because of the leverage that we're seeing in the business.
Right, good to know. Costs are coming down due to the leverage in the system. But advertising as an expense, Varun, that remains a big component, close to 35.3%, if I'm not mistaken, of your overall expenditure. Will you be looking at reining in these advertising costs? And, how do you see the overall, expenditure on the cost of material, etc.?
Aman, I think this percentage that you're talking about needs to be looked at as sum of parts. So while we have Mamaearth, which is a large enough brand, the fastest to 1,000 crores, we also have 5 other brands which are currently in investment mode. And in the last 7 years, we've actually built all of these brands together, and this number is actually a sum of building all of them through the advertisement expenses that you're talking about. While Mamaearth continues to get much better, some of these younger brands are currently still in the investment stage.
And even there, if you purely look at numbers, for Honasa Consumer, which is a house of brands, and we have seen the average percentage also coming down. And so from 40% 2 years back, it's come down to 35% for the overall business, where, like Ghazal rightly said, 3 years back there used to be only one brand. Now we have 5 more brands in investment mode. And if you just look at the reinvestment rate on those brands as well, right, from our 80% last year, it's already come down to 46% this year, Q1. Right? So leverage is actually kicking in there as well. Right? But we are choosing to grow much faster than the market, right, and capture the opportunity there, right, because we genuinely believe that we want to create brands that Indian consumers love, which are crafted for Indian consumers, and Honasa will continue to try and capture that opportunity which is out there.
So let's talk a little bit about how you plan to do that as well, because I understand that one of the purposes of the IPO is going to be the investment in BBlunt. How many salons are you looking to set up, and on average, how long does it take for a salon to break even? And also walk us through what will the remaining proceeds be used for the overall IPO?
So, like we said, as Honasa, right, our belief that beauty and personal care as a category, right, is going to continue to grow as the fastest amongst the FMCG subcategories is very strong. Indian disposable incomes and women joining workforce as a trend, right, is going to shape this category really well. And as Honasa, we want to capture the largest share of that growth, right, especially that the growth which is going to come because of premiumization, where consumers are looking to move up. Right? And to capture the share of that growth, right, we need to build strong brands that consumers are aware of, right, and that they know what they stand for and what kind of products they sell. Right? And to do that, you need to invest in brand building. And so I think growth being primary objective, brand building being the how to achieve that growth. Right? And once you build a brand, right, for a very, very long term, right, consumers continue to reward you with sustainable sales and growth. Right? So I think the first priority would be to continue to build brands from the capital that we are raising. And the second priority will be to expand our omni-channel presence by opening more standalone stores. And the third place where we are looking to invest some bit of the money that we are raising is also expanding the salon footprint. Right? Because for us, the salons also help build BBlunt as a brand, which helps drive the products business of BBlunt, right? Which is where we are very strongly growing. Right? And then we are raising some for corporate journal purposes, where we could evaluate acquisitions as well.
Okay, fair enough. Now, as of FY23, the sale from the top 10 products that accounted for about 28% of the total revenue, which has fallen from 30% in FY21. Is this a conscious call that's been taken by the company to diversify into newer products?
So I would say two things. One, averages and contributions are sometimes misleading. Right? If your head is on fire and your eyes is on water, on an average you are good, right? But not necessarily true. Right? Similarly, if you look at the actual numbers here, right? A 30% of 100 crores might be about 30 crores, right? And a 28% of 1500 crores, right, actually is 400 crores plus. Right? So effectively, the top 10 products have also seen disruptive growth. Right? But during the same time, like we said, we have launched more brands, expanded our base and denominator, because of which that percentage has come down by a few basis points. Right? So it's a story of a lot of things happening together being measured by a single number, and which is not the correct story. On the other hand, we continue to innovate and provide the right kind of products to consumers. That's been our mission from day one, to fulfill our consumer desires, and that mission we will continue to be on.
Going right back to the valuation, because, we discussed this in the past and there had been a lot of those concerns and people voicing their opinion regarding the valuation. Do you think that at the current valuation, which you pegged at a little over 10,000 crore rupees, you're leaving room for investors? Is it going to be taken down well, in your opinion?
You know, it's a process that we've also gone through, where we have met over 100 investors along with our bankers, right? Basis which this number gets arrived at. It's also a number which not only captures where the company is today, right, but captures where the company potentially can be in future. Right? It's a fast-growing company, right, which is still not at a steady state margin profile. Right? Over years, the margin profile will continue to change and improve. Right? And hence, if you look at it from a EV to revenue and EV to gross margin perspective, which is a better ratio to look at it from, and I think we are fairly attractively valued at this point.